Welcome back, everyone. My name is Ian Group, and for those of you that don't know, I'm a lawyer that takes complicated topics, simplifies them with the whole goal of giving you what you need to be smart today, to be rich tomorrow. Today, we're going to talk about, it is probably the most frequently asked question that I get asked on Instagram, via email, in the comments, which is not knowing where to start. Where do I start? Where do I begin? Can you give me an investing or a personal finance 101? And so this episode is meant to do just that. This is what I did when I started. Let's go back to 2011 when I graduated law school. I did not know what to do. I looked at a stat here. Americans owe $807 billion across 506 million credit card accounts. It's no wonder that we can't string together $1,000 in case of an emergency out of our savings. I'm going to tell you where to start. Let's get into it. But before I do, I'm going to talk to you today about a number of things. I'm going to talk about a budget. I'm going to talk about paying off debt. I'm going to talk about tracking your net worth. I built tools for all of these things, and I'm going to link to them in the show notes. But at the very least, download my budget completely free. And there's a great video. When you download it, you'll see a video. It'll walk you through everything. So let's jump into it. I'm going to give you a 3-phase approach to getting started. And I want you to think of this similar to the way a house would be built. If you're watching a house get built, you'll see a foundation, then you put up the bones, the walls, and then you fill it with cool stuff, right? The cool stuff comes later after you've moved in, but you got to build the house first. So number one, let's talk about getting organized. Got to organize your supplies before you can build that house. So let's start to build the structure together. You can only build that structure by being organized. And what I want you to do is write down your assets and liabilities. An asset is your money. If you have stocks, if you have cash, your checking, your savings, your house, a car, write them down. On the flip side, you have your liabilities. These are things that are costing you money every month. I want you to write down all of your liabilities. And I want you to take your assets, and from that total number of all your assets, I want you to total your liabilities and subtract that number from your assets. What do you get? Is it a positive number or is it a negative number? If it's a negative number, you've got work to do. If it's a positive number, congratulations, you have a positive net worth. And you're going to keep working on it. But if it's negative, let's talk about debt. I have a nuanced position on debt. Number one, if it's high interest debt, and I deem anything to be high interest above 6% or higher, if it's high interest debt, you got to get rid of it. You have to get rid of it. Let's just look at the average return for the S&P 500. If you're a beginner, S&P 500 is an index of 500 of the best companies in the United States. That on average will return about 7%. If you are paying 6% on your debt, and you are trying to invest, overpay that back, you are maybe marginally going to squeak by with a profit. Likely not. And then if you have credit card debt or anything above that, forget about it. You're hustling backwards. Get rid of it. Now, if it's below that 6%, I have student loan debt remaining at about 2.35%. I feel confident that my money in the market is growing faster than the interest is growing. If I wanted to, I could take savings and wipe that out. I'd rather keep that money invested. When the rate is that low and the debt doesn't bother me, I don't mind paying that back every month. We got everything organized now. We've got our assets, we got our liabilities, we know what debt we have, and we're going to have a plan of attack for the debt. And if you need a plan of attack, if you want to see it written out, ultimatedebttracker.com in the show notes. That is going to be a great tool I built for the purpose of organizing your debt. Now that we're organized, let's talk about step 2. Which is protecting today. You need an emergency fund. It's literally cash, which I keep in a savings account. That emergency fund is there for you to have access to cash in the event shit happens. Something happens and you need access to that money. That's what it's for. 3 months of expenses go into that emergency fund, and you're building a little bit of a moat around you to protect you in the event anything happens. So we've got organized. We're protected for present day. Now that we have that foundation built, and by the way, caveat, debt paid off, now is where we start to fill the home with the cool stuff. So there are 3 types of accounts I want you to know about in terms of the cool stuff, the investments. Number one, a 401k. I like this because you contribute pre-tax money. It grows, you eventually pay taxes when you sell it down the road and you start to use it. I would begin with this if your employer offers this program and they give you a match. And by match, I mean you contribute money, they match that money, and it's like you getting additional compensation. They are adding to your retirement account. Worthwhile to take that free money if it's offered to you. Number two is the Roth. Super powerful because what this allows you to do is contribute post-tax money. So after you've worked, that money's been taxed, you have withholding taken out, that money now sits in your account. You can put that into a Roth and it grows tax-free. You can contribute up to $6,000 a year. You can invest it in whatever you want. Once it's in that account, you can open up Roths with any of the brokerages that you use, Fidelity, Vanguard, whatever it is, you can open up a Roth account. I had mine through Wells Fargo. The Roth is great because it's tax-free growth. The money that's in the 401k and the Roth, those are retirement funds, okay? So you have to be mindful that you cannot use those funds until you get to about 59 and a half years old. There's exceptions to using it, but consider it out of reach. The account that you can access right now, which I think everybody should also have, is a taxable brokerage account. That is just a basic brokerage account that you can open up through Fidelity, through your bank, through an app like Robinhood. So those are the three accounts that I want you to know about, the 401k and the Roth. Those are retirement accounts. Consider that money to be long-term. And the taxable brokerage, which is money that you have access to right now, but we're going to try to keep it for long-term. So I just threw a lot out at you, but let's sum all this up. As you're building the foundation for your home, you are going to lay that groundwork by getting organized. Getting organized means looking at what money you have, what money you don't have, debt, and looking at your expenses and understanding that full picture. Next, you're flowing into that debt payoff. Focus on that. Get rid of that high interest debt. If it's that lower interest debt, make sure there's a space for it in your budget. Okay? Next, we're going to move on to protecting your house, protecting yourself by focusing on an emergency fund. Start with $1,000, but build that up to 3 months of expenses so you really have a strong foundation built before you move into the last step of investing. 3 accounts I want you to remember: the 401k, the Roth, and the taxable brokerage. The Roth, the 401k, use that if you have an employer-sponsored program where they're offering you money. If they're not offering you money, I would look at the Roth IRA, which you can grow tax-free. You can contribute up to $6,000 in that. And then I would look at your taxable brokerage. Just remember, this is the beginning. I want you to focus on one thing at a time. And for a lot of it, that's going to be to get organized. And that's okay. This is where I was 10 years ago. I promise that a decade from now, even less, but a decade from now, you are going to be so happy that you took the time to watch this video. Invest in yourself to figure this all out. So I wish you luck. I'll be here next week. Don't worry about it. If you need me, you can ask me questions. Use the comments below. Reach out to me on Instagram. And remember, you're learning. You're doing the right thing. And being smart today means being rich tomorrow. See ya.